In this video, I want to share with you how do you do your closing entries. So one of the things we do at the end of every year is we close out our equity accounts into our retained earnings. We technically do it on the first day of the next year. And I want to walk you through how to do that. So the first thing to know is kind of how retained earnings work. And I've done a video on this before, but I thought that'd be a great place to start. And then we could talk about equity. All right, so to dive in, the first thing we want to talk about is our reports and looking at our profit and loss to understand our retained earnings. So you're going to go to reports, profit and loss, and then you're going to look at, let's just say last year. Because a lot of times people don't understand how retained earnings work, how QuickBooks closes them naturally for you. So I kind of want to show you how this works. So first things first, we pull up, say, last year, and we'll see we have profitability of $91.25. So remember, a profit and loss just shows your income and your expenses. It doesn't have your equity. So to look at our equity, we are going to go to the balance sheet. Now, I have mine under favorites here at the top, but if yours isn't at the top, you're going to find it under business overview. Okay, so profit and loss here, and is what we pulled first. Now we're going to look at the balance sheet. So remember, profit and loss is just income and expense. A balance sheet is going to be assets, equity, and liabilities, right? So it actually goes asset, liability, then equity, if we want to be technical, but let's keep it simple for today. So we're going to go here, we're going to drop down last year, and we're going to click Run Report. So as long as you have your report basis, whether it's cash or accrual, on the same, you'll notice when you come down here at the bottom, there is our net income of $91.25. Right now, this business doesn't show that there's technically any equity here, but if you look at yours, you might see an amount. On the desktop version, we can actually double click on that amount and it will show us, but in the online version, it's a little extra complicated. They won't let you. So the only way to actually see that is to go under your accounting, chart of accounts, go down to your equity accounts, which you'll see right here, and you'll see retained earnings. And when you click Run Report, and then if you drop this down and scroll all the way to the top and click All Dates and click Run Report, you will see on yours the closing entries from one year to the other, okay? So what we're going to do is we're going to go back over and we're going to look at our balance sheet. And we're going to be looking for at the end of the year, so let's say last year, did we have any owner contribution, any distribution? Because these are what we could call temporary accounts. It's best to close them out each year so they start fresh and you can see exactly what's in them, okay? So right up here, we will see our draws. Now, we see our $91.25. If I change this by one date, and I say January 1st, and we run the report, we'll come down here and we'll see now it's moved to retained earnings, okay? It automatically moves it from net income to retained earnings. And if we said, okay, what have we done this year? I just kind of want you to really see this so you see it. And you scroll down, whatever profitability you see on your profit and loss will show up here as the current net income, okay? So retained earnings is an accumulation of the entire time you've been in business, what's happened in the prior years. Just remember that the current year won't close in until the first day of the next year. So one of the things that we want to do is QuickBooks naturally does the retained earnings. You don't need to do a journal entry for that. But what it doesn't do is these own equity accounts. So if you have opening balance equity or draws or contributions, it won't close in. So that's what I'm going to show you how to do today. How do you close that in? So you're going to come over here and you are going to go over to the plus. It's the best way to get to the journal entries and click journal entry. Now what we're going to do is we're going to close out just this $1,000. And we're going to do it on the first day of the next year. And the reason is because we want to keep our balance sheet accurate. We don't want it to change this. We just want to zero it out so it can start the next year. So we always use the first day of the next year. Okay. So we're going to go to the plus, go to journal entries. We are going to choose what date here? The first day of the new year. So we're currently in 2021 in this example. And then we're going to come over here and we're going to pick our accounts. So equity is typically a credit-based account. So when we have draws, that means we've been as a negative, it means it's a debit balance, right? So what we're going to do here is we're going to go to owners, equity or draw here, and we want to zero that account out. So right now, if it's negative, it means it has more on the debit side than the credit side. So we want to add a credit. So we're going to add a credit for $1,000. That's going to zero it out, okay? If you have owner contribution, it's probably already on the credit side. So for owner contribution or shareholder, depending on your entity structure, you're going to want to debit to reduce those, okay? So it depends on what it is. That's why we look at the balance sheet first. We find out the dollar amount. Sound good? All right, perfect. So then we're going to go here and we're going to move this over to retained earnings. So what happens is retained earnings is also an equity account. It's the accumulation year after year after year of what happened in the business. But if you're taking out distribution or you're adding contribution, we close that into the overall retained earnings of the business. So you can come over here and you can enter in your closing entry. You can even just say closing owner draws into retained earnings. Whatever you want to add, and then the year that you're doing it for, I'd recommend, okay? And I recommend adding that to both lines so that what? You have the detail that you need, okay? If you have another equity account like contributions or something else you need to close out, make sure you add that. And then you're going to come down here and you're going to save and close it. So now let's look at what happened on our reports. So now that we scroll down, so we're going to say last year, what happened? Nothing. It's still there. Perfect. We did a good job. The reason we do the first day of the next year is because we want our balance sheet to stay accurate. We just want it to be fresh for the first day of the new year. So as soon as we change this over and we say January 1st of the new year, January 1st of the new year. Oh, I accidentally clicked December there. That's okay. January 1st, you'll see, let me go just to the first. I'll just make it easier to see the report. So we'll scroll down and now you'll see draws is zeroed out and it's moved to retained earnings. Now, instead of retained earnings being a positive $98, once we closed what we took out of the business, our distributions or draws, now the business is technically negative as retained earnings, meaning it went into the hole. So if we want to come over here and we look at our chart of accounts and we go down to our retained earnings, it's right here actually, and we run our report, you're going to start seeing what you adjusted. Now it won't on the online version, it shows the closing entry. On here, it doesn't show it yet, but what it does show is the $1,000 coming back out, okay? But when you look at your balance sheet, you'll see the difference. So if you go from one year to the next year, you'll see the difference. And you just want to say, now what happens is, I want to be really clear about this so you kind of get some education. The moment you start adding more days and there's income and expense, you'll notice your net income will start adding. So as soon as I say through this year and I run it, I've now added more detail. See? So that's where this net income comes in. It's what happened in the current year. But our retained earnings only changes from one year to the next. So if I change this to 22, right? So the next year, then what's going to happen is those retained earnings will close into the next year. And now we have an adjustment and we start all over again on the first day of each year. So that's how you do your closing entry. Let me know if this helped you. Give me a thumbs up, subscribe. And if you want to make sure you get these tips and tricks in your inbox, make sure to go up above or down below and subscribe to our tips and tricks. And if you're looking for more training on how to really customize QuickBooks to your specific business, check out Confidence with QuickBooks. Thank you for being here, and I look forward to seeing you inside the next tip and trick. Have an amazing day. Bye.